Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, January 4th, 2016. So we saw another pretty strong day today, and it was pretty much from start to finish. It wasn't like yesterday where we had the gap up and then we pretty much saw selling for the remainder of the day until really the last 15 minutes where we saw a push up. So today we saw the gap up and they did continue. So now we actually have two gaps open in 2017 with just 2 days of trading. So I guess they're not changing that angle of things. But anyway, it's not a shock because what I was saying was that I was actually saying that it could go higher here because we didn't have any bearish divergences that were on from this spike up here. But what happened was typically I was anticipating that they were going to form a bearish divergence on this, but you can see that this gap up here and continued higher. So this divergence was taken out, but if you follow my cursor, you can see that this is where it pretty much topped right here, and we continued higher, and the price oscillator went down. So we do have a bearish divergence in place for the 15-minute chart. Now, I have down A, B, C because I still believe that this is in an ABC pattern. So really, the only way that that's going to work is we're going to have to see the S&P get held down pretty quickly, because if we start going above this level, then this pattern's out and it was really just an ABC and this was the low, and now we're going to continue higher. But the fact that we didn't have any bullish divergences on the 60-minute chart, that's what led me to believe that we still have another leg down. But again, the market's going to do what it's going to do. We can only take certain aspects of it, which is mine is the technicals, where I look for divergences and support and resistance, and you try to draw a roadmap and you use it until it's proven not right. So as of right now, obviously, if we start getting above, into this area here, then it was simply just an ABC move. This is over. We found buyers at the moving average, and now they're probably going to make a move up to the 2300 level if this, if they're going to continue higher. So you can see we're pretty overbought right now, and if things are going to be correct, then we should top right at this resistance right here. And this was our A, B, C of an A. We now came up, made a wave B, and now the next move would be a wave C. So I mentioned in the morning notes that your conservative traders, you wouldn't be trading for the short side, because the daily chart is suggesting that we are going to make higher highs. So if we got the pullback below this, the 2233 level, then it would be a buying opportunity. It would probably be coming somewhere down into the 2200 level, and you'd be able to get a nice swing trade to the upside. Now, the reason why I'm not really that interested in joining the party on the long side from here is, if we make these new highs right here, where you're going to have bearish divergences. So the risk reward as far as going long is not there for me, because anywhere above 2281 is going to trigger the bearish divergences. And on a daily chart, when we've seen that, we've seen 60, 70, 100 point moves to the downside. So I'm not interested in taking any long positions here. I'd rather just wait and be patient for the short setup. And if we come down to the, somewhere at this below the 2233, then I would get bullish and then anticipate that we're going to get that move up here. So from this level, I just, to me, there's not enough meat on the bone to be jumping on a long trade. If it comes down, I'm interested long. On the 60-minute charts, this is, the lack of bearish divergences are leaving the door open for, move below here. But obviously, if we continue higher, the notion of the ABC move of an A and then a B and a C down is going to be wiped out. So, we're getting at some lines right now where if this pattern is going to work, they're going to have to reverse it. And, maybe it's going to come up to this level here. It's going to be tough. Like I said, we have the bearish divergences already. We're overbought. on the 60-minute chart here, and any new high from here, we're going to get bearish divergences on the daily. So I would be a little careful. You guys can, as far as trade whatever direction you want, but for me, I'm trying to look for the setups that are going to be worth more than, say 50. I'm looking for something between 50 and 100 points on the S&P to be able to pull the trigger on a trade, and we really haven't seen that in quite some time. Really, it's been right after the elections. But from there, things are going to start shaping up. We're going to be getting a lot of volatility in this market, but right now, I'm open-minded for whatever direction they're going to take it, and that's really about all I have for tonight. So with that, have a great night, and I'll talk to you guys tomorrow.